Hi, and welcome to this webinar with Acuity Trading and Signal Centre. I'm Joe Neighbour, and I'm joined today by two industry veterans. We have Andrew Lane representing Acuity, and we have Steve O'Hare representing Signal Centre. The idea of today is just to run through some interesting information with regards to usage of news in trading and also technical analysis, and compare the two, talk about the pros and cons around each of those. And hopefully give you guys a bit of an insight into the services that both companies provide. So I'm going to start with you, Andrew. What I'd like you to do is give us a bit of a brief history about the usage of news in markets over, history
Yeah.
and how it's been used. And then I'll do the same for Steve.
Well, thank you. And as you guys know, I'm much more in favour of news. I'm a news person. Did you know, Steve, long before technical analysis was even dreamed of, they were using news to trade? In fact, during I think it was the U.S. Civil War, they actually, it was the first arbitrage on news. The postage boat going back to London to send information of the war being over. Some wealthy trader bought a boat that he knew was faster than the postage boat to send the news back to London to trade on the stocks or whatever it was back in London in those days. So news has been around for a long time, and then we had obviously the tickers, the news wire start, and then social media, and it's all gone up now. So just saying that, news has been around for a while.
Yeah, no, that's a very fair point, Andrew. Thank you very much. I didn't realise this was going to turn into an MC battle about trading and using news and technicals. But Steve, I'll hand it over to you. You can give us a brief history on the usage of technical analysis in financial markets.
Yeah, I'll try and keep it brief because obviously I think technicals really, or numbers has been around a lot longer than words, but maybe that's another argument for another day. But yeah, so if we talk about technicals, really we can trace it back to maybe the 18th century and from the rice trading paddy fields or markets in China and
Is that when
Japan.
you started trading, Steve?
Yeah, just a bit after that it was, but yeah, it was, and more recently, I suppose, also going back maybe 150 years, maybe more than that, is Charles Dow, the godfather of technical analysis, who really introduced us to using the price and understanding the price. I mean, he did have something to do with the Wall Street Journal as a part-time role. But then his main focus was obviously on trends and understanding them and setting rules around it. Obviously, technicals is a bit more of an art than a science. So the artists of today, like myself, have got different views on it maybe than you have.
Excellent. Thanks for that brief synopsis of the history of technical analysis. And now, obviously, financial markets have become widely available for everybody. Gaining access to a trading platform has never been easier. So there's plenty of modern uses now for news and technical analysis. In terms of news, Andy, how have things evolved on the news front for a modern day trader? How can they use news as part of their toolkit to give them an edge when it comes to trading?
Yeah, I'm just going to share my screen. I think first of all, you need to understand that there is a lot of different definitions of what news is. I term it as three parts. You've got news, commentary, and analysis. A good example of my screen here, I've got the Dow Jones here on the Acuity platform. ADP jobs report missed expectations, and they're talking about that. And it comes from Barron's, which belongs to Dow Jones. A commentary would be something like this, where they're putting commentary on the numbers that have just come out. And I find as a trader, this is the most interesting information because it's information that's coming from key players in the market. Now, the way it's changed is that people used to click and trade. You used to see numbers coming out and you used to buy based on those numbers. But nowadays, traders, thanks to the likes of Acuity, have got many more tools at their hands. And what we can do is we can say, well, let's take crude oil here. And we can say, use something called natural language processing, which is a type of machine learning. And we can say all the news that's come out overnight or the last 24 hours, how much of that news was positive and negative. And we can see that the market is really positive in the last 24 hours, but actually it's on a downward trail. So we can see the trend of sentiment over the last, I think it's 2 months. and we can see all the news that's come out in the last day, and that's all been positive. So we've got different types of news, and we've got this new tool called sentiment analysis, which allows us to measure millions of stories that are coming out every day.
Fantastic. Again, I think the visual side of things there, really help traders to make that kind of split-second decisions without having to, read through all those articles. But when it comes to technical analysis, Steve, obviously it's become a very popular subject. It's quite simple in some instances for people to understand and come up with sort of simple strategies to follow. Quite a good way of getting, an understanding of financial markets. How have things changed in terms of technical analysis, and how is it applied in modern trading?
Yeah, I think we've come a long way from the sort of point and figure charts that traders used to use initially, and put in noughts and crosses to try and build up a picture or a pattern that they can see developing, rather than just looking at straight numbers. So that's one of the main things that have changed as computers have taken over the world. We've seen that. And I'll share my screen here and give you a bit of an overview of what's really accessible nowadays to most traders. There's free versions of quite powerful charting packages that can be used, and all the tools and indicators that have been developed over the last 100 years, I'd say since the 1920s and even the 1950s, when technical analysis really sort of came under the spotlight in the more mainstream. It's using these tools, which even up to maybe 10, 15 years ago, this was a really expensive, this would have been a really expensive package, but now it's accessible to everyone, and we can sort of like take a look over different time frames and look at all types of analysis just in the one chart. So it's really easy for the movement, for understanding, for really getting an overall picture of what the price action is doing and what it means. Obviously, we know that news is one of the main drivers of the market. So what technicals do is we basically analyze the price. So we analyze the price of any given asset or product or stock, and we really sort of like focus on the price, which is basically formed by the fundamentals. But obviously the technicals can really give you a really good idea of where to enter trades, rather than just sitting there and listening to the news.
Cool. So clearly there's pros and cons to both styles. I mean, there doesn't have to be a one size fits all. You can use both methods in trading quite successfully. But what I would ask, because I'm sure both of you are passionate about your respective ways of trading, whether that be using news or whether using technical analysis. But Andy, from your perspective, obviously you're very biased towards using news. Can you see any, or what do you believe are the pros when using technical analysis? So actually flip this round. What's your view on technical analysis, and what do you believe are the pros, and how you would use it to assist your trading potentially?
So I've always felt that the market was split in two. When there's news coming out, the markets were moving in news. When there was no news, the markets moved in patterns based on technical. Take the pound, for example. The pound overnight during Asian trading hours, there's not much news that's going to come out and affecting it, and sort of trade on technicals. I'm not sure if that is true, because I'm not in depth into technicals, but that's what my feeling is. But nowadays, I think looking at, and we've discussed this a lot, Steve, is that the intermingling of news and technicals together. So, for example, in my estimation, you could have a big push up, or the technicals are saying that there's a breakthrough in price, and if the sentiment is positive as well at the same time, then that's going to really help it push through that level. And conversely, if a level is broken and sentiment is negative, then maybe that break won't have such a chance of success. So that's definitely where you could use it together. But I think Steve's probably got better ideas than I do.
I'm sure Steve would be able to go on about the pros of using technical analysis, but I'd be interested to see your views, or hear your views on how you think news could be of benefit to you in your trading, as primarily a technical trader.
Yeah, I mean, I've sort of come through a whole sort of in the different industries or different sort of mediums of trading. When I started on the live floor, it was very much, we relied on noise analysis rather than actual sentiment or news, or even the sort of technical side of things. But as the trading floors shut, that noise sentiment disappeared, and we really had to go to other forms. Fundamentals was maybe a step beyond me, maybe Andrew might say, but I found technicals really easy because it had the numbers in it, and it was quite easy to relate to. So, but also on the other side of the coin, I think it's really important to understand what's going on in the news, because that is the main driver of the market, and using them in hand is really important. I think even if we look back at, in fact, I could bring the widget up on my screen, and maybe just, it was something I was looking at today. Let me share my screen even. So I think I'm sharing my screen. And it's something I looked at on crude oil, and really with these market alerts, the market alerts is really looking at the news sentiment. And if we sort of like drill down into the detail, we can get we can basically see the correlation, and we can also see divergence between news and price. And for me, that's really key. You can see that price sentiment for quite a while has been driving lower. News sentiment has been driving lower, and price has followed. And on a couple of occasions, we've had really decent news sentiment market alerts, which, when you marry it with the price as well, you can see that the price broke sort of quite key levels around about this $69 area, and the news sentiment was pushing way through that and turning very negative. And so you had both forms of analysis coming together and giving you an even better overall picture, and that's when it can work really well. Nice. I think they can go hand in hand, and I think it's really important, as the markets develop, to look at that. You can't just be sort of like focused on one type of analysis, because that's all we've always looked at.
Yeah, cool. Okay. I agree.
So in terms of, obviously we've discussed the pros and how they can work together. Are there any specific drawbacks or negatives that trading one or the other can potentially have as a result of trading? With regards to news, Andy, is there anything that you feel may not give you as much of an edge if you are trading only using news?
I think these days trading news is tricky because there are so many aspects of news that come in. And you could be. I remember telling the story of if you're trading Apple shares, you've got to be able to read Chinese and understand what's happening to Foxconn, because Foxconn is a major supplier to Apple. And I remember once there was a fire at a Foxconn factory. So trading news, you might feel as though you're on top of the news, but you can never really be on top of the news in detail in that way, even with the machines we have today. The only way actually I'm familiar of is using sentiment analysis. So there is drawbacks on that.
Yeah, certainly. There are big machines and very clever people out there that don't really give these retail traders sometimes a chance to act upon certain things, and they can take away that edge quite quickly. So certainly the speed of how it's delivered can be a drawback, but at the same time, taking an overview and understanding the general sentiment can help with maybe longer term trends rather than ultra short term trading, I suppose. And
yeah, I agree with that.
In terms of drawbacks for technical, Steve, where would you say there are potential pitfalls or drawbacks when it comes to trading only using a technical approach?
I mean, only using technical, the technicals seem to work better the more people that are using the same technical, so it's almost strength in numbers. So for me, it's really focusing on the sort of like the main types of technical levels that you can glean from a chart. Maybe the major support, major resistance levels are probably the best to focus on. But obviously the drawback is, I suppose it's presented maybe in the news headlines, maybe not even the news headlines from reputable sources. It's more fake news headlines can easily influence the sentiment, and you could sort of see the prices move against you. You might be right with the trend overall, or your initial analysis is right. But if you're trading from a really short-term perspective, you can easily get taken out, or the price can easily get taken out. Your position you can have a losing position very quickly if there's some sort of sentiment has gone against you. You know, with the best intentions in the world, I think technical analysis itself is more of an art than a science. So it is only going to work a smaller percentage of the times. But as long as you can apply a really good money management strategy behind that, then you'll definitely have more chance of success, which is something that we really focus on at Signal Centre. Not just the analysis, you know, more, you know, just as much on the trade strategy around that trading point.
Great. So clearly the two topics are very intertwined, and I think any trader that's looking to get involved in financial markets or is already involved in financial markets should definitely consider using multiple approaches with their trading. Thank you very much for both of your insights on this today. Hopefully it's been useful for those of you who have been watching, and we hope to be back with some more insightful content again in the near future.
Thank you very much.
Thanks,
Cheers,
Joe.
guys.
Cheers.